If the IRS asked you today to support something on your tax return, could you find the records? Could you show where your agency's income came from? Could you support your expenses, your payroll, your business mileage? Because good tax record keeping isn't just about saving documents. You also need to be able to retrieve them. So today, let's talk about what tax records your home care agency should actually keep, how long you may need them, and how to organize them so you can actually find them. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And this is part of our series about protecting your home care agency from costly tax mistakes. Let's start with something important. The IRS doesn't generally require one particular record keeping system. Your records can be paper, they can be electronic. You can use accounting software. What matters is that your system clearly shows your income, expenses, and supports what you report on your tax return. So, what should you keep? Record number one, income records. Let's say your home care agency reports $750,000 of gross income. Where did that number come from? Depending on your agency, you may receive private pay income, third-party payments, each deposits, checks, credit card payments, or other payment sources. You want records showing the amount and the source of that income. That may include invoices, deposit records, payment reports, Forms 1099, and other records connecting that money to your business. Think about it this way. If your return reports $750,000, can you show how you arrived at that amount? Your records should answer that question. Record number two, expense documentation. Now, let's talk about deductions. Suppose your credit card statement says ABC Company $1,000 June 15th. That helps show you paid $1,000, but what did you buy and why was it for the business? That's where supporting documentation comes in. Your receipt, your invoice, your purchase order, or another document showing what you actually purchased. Because proof of payment alone doesn't necessarily prove you're entitled to the deduction. So ideally, you want documentation showing what you purchased and documentation showing payment. And in a moment, I'll show you a simple way to keep those two things connected. Record number three, payroll records. For a home care agency, this one is especially important. You may have caregivers, administrative staff, schedulers, and other employees. And payroll may be one of your largest expenses. But when I say payroll records, I don't want you thinking you need to manage all these manually. I strongly recommend using a reputable payroll provider. Payroll has too many moving parts to try to manage manually. A good payroll provider will typically use payroll software that maintains many of these records electronically. That may include employee information, wage records, time records, Forms W-2, Forms 941, and payroll tax payment records. So your job isn't necessarily to create all these records yourself, but you should know where they are, how to access them, and how long they're available. Because using a payroll provider doesn't eliminate your responsibility as the employer. You still need oversight. Review your payroll. Make sure tax payments happen. Make sure returns are filed. And know how to retrieve your records. So, yes, delegate the payroll processing, but don't delegate the oversight. Record number 4, business assets. Let's say your agency purchases a vehicle, computer, equipment, office furniture, or another business asset. Keep the records related to that purchase. When did you buy it? What did you pay? How was it used? Did you make later improvements? And eventually, what happened when you sold it? Those records may affect depreciation, your basis, and eventually your gain or loss. So, this is one category you don't want to discard too soon. Record number 5, special deductions records. Some expenses require more than simply showing payment. Business mileage is a good example. If you're claiming business vehicle expenses, you may need records showing your business miles, the dates, the destination, and the business purpose. And that business purpose is especially important. It's not enough to simply say, I drove 50 miles. Why did you drive those 50 miles? What was the business reason? That's part of the documentation. I'll show you a quick example of how this can be tracked electronically. Other expenses, including travel and certain gifts, can also have additional documentation requirements. So remember, the type of expense helps determine what records you need. Record number 6, file tax returns. And this one is simple. Keep copies of your file tax returns and important supporting tax documents. But don't just have a copy. Know where that copy is. I see this quite often when working with new clients. I'll ask for a prior year tax return, and sometimes the business owner has no idea where it is. Now they're searching through emails, looking through files, or trying to contact someone just to get their own return. You don't want to be doing that when you suddenly need the return. You may need it for tax preparation, financing, legal matters, or another business purpose. In my practice, once a tax return is completed, I upload the client's copy to a secure portal. That way, they can log in and access their return whenever they need it. Whatever system your tax professional uses, make sure you know where your returns are stored and how to access them. Now, how long should you keep everything? You may have heard 3 years or 7 years, but there isn't one retention period that applies to every record. For example, for many income tax records, 3 years is a common starting point, but some situations require longer. Employment tax records generally need to be kept for at least 4 years, and property records may need to be kept for much longer. So rather than trying to memorize one number for everything, remember this. How long you keep a record depends on what the record supports. When you're unsure, check the rule for that specific record before getting rid of it. Now, let's talk about how you actually keep everything. Some business owners still have the famous shoebox full of receipts, and paper records can be acceptable. But here's the practical problem. Receipts can fade, paper get damaged, documents can get misplaced. And even if you keep everything, what happens when you need one receipt from 5 years ago? The goal isn't simply, I kept it. The goal is, I can retrieve it. That's why I personally prefer an organized electronic system. And there are several ways you can do that. If you use QuickBooks Online, you can attach supporting documents directly to the related transaction. Let's say you purchase something legitimate for your business. The transaction is in QuickBooks and you have the receipt or invoice. You can attach that document to the transaction. Now, the transaction and its supporting document are connected. That's something I encourage encourage business owners to do on an ongoing basis. Other accounting platforms may offer similar functionality. The important part is connecting the transaction to the document supporting it. So if you need it later, it's much easier to retrieve. Another option is organized cloud storage, such as Google Drive. You might organize folders by year and then by category. For example, 2026 income, expenses, payroll, assets, tax returns, and your consistent file naming system. Because imagine having 1,000 receipts in one folder. You technically kept everything, but 2 years later, you need to find one specific receipt. Would you know where to find it? That's where organization matters. And if you already have hundreds or thousands of poorly organized electronic documents, AI can now help with things like sorting, organizing, and renaming files. That can be especially useful when cleaning up an existing document library. But going forward, I'd rather see a system where the document is organized correctly when you receive it. The goal is making retrieval easy. So here's a simple way to think about it. When you receive an important document, save it. Then put it where it belongs while the information is still fresh. That way, if you need it months or even years later, you know where to find it. That's really what good record keeping comes down to. Capture it, organize it, and make sure you can retrieve it. Maybe you use accounting software. Maybe you use cloud storage. Maybe you use another secure electronic system. The specific tool can vary. What matters is having a system that allows you to find what you need when you need it. Because if the IRS ever asks, where did this number come from? I want you to be able to answer, not from memory, but from your records. If you're a home care agency owner and you need help with your business taxes or accounting, you'll find my information in the description below. Make sure you subscribe because we're continuing with more tax and IRS issues home care agency owners need to understand. I'll see you in the next video.